LBR LBO Debrief, Business Climate Outlook of 2016.
In a long morning, friends, we have listened to 5 insightful, thought-provoking, sometimes entertaining presentations from Eteri, Ralph, Gunjan, Paulia and Nishan on the global economy, the outlook for Western and Asian economies, the shifting geopolitical tensions, and the impact on the Sri Lankan economy. I expected it to be intellectually exhausting given the 5 presentations, but I had the benefit of being able to glance through the presentations this morning. So it wasn't too bad. I must congratulate the speakers for keeping their presentations concise and to the point. What I would like to do is, rather than summarizing the presentations, just share a personal perspective to set the stage for the panel discussion that is to follow. So the last decade has seen a story about people, companies, and countries living beyond their means. This has been told many times over. There's been a flurry of excitement. Lots of people borrow lots of money to live beyond means until it becomes clear that they can't pay all of it back. A bust soon follows. It all started with the subprime fiasco in America, where credit was extended to people without jobs, without income, without assets. That ended badly in 2008. This was followed by governments in Europe, the likes of Greece and Portugal, borrowing at the same rate as Germany because of the EU agreements. And that ended badly in 2010. Emerging markets is the third dimension. Now, what has happened in the last 8 or 9 years or so is that emerging markets have become a real force to reckon with. They are now 58, they contribute now as much as 58% of global GDP. And what has happened is also that in the last 5 years or so, they have also borrowed exponentially to finance growth. The GDP, the debt to GDP for emerging economies have grown from 75% to 178% in the last 5 years. And what makes matters worse is that the exchange rates also have weakened in most of these emerging economies. So the mere discussion in recent months of US planning to raise interest rates has resulted in bodies of monies flowing back and putting significant stress on emerging markets. So there was this discussion for quite some time where we said that Asia is largely insulated from what's happening in the West and Europe. But now that perception seems to be changing. There appears to be a massive shift in the opposite direction in the Asia's growth story. Asia is certainly not one monolithic block, as I think Paulie has mentioned. I happened to read the Economist magazine this morning, and they have categorized countries based on the impact into 3. A slow depressing impact in countries like China, Singapore and South Korea. So China, of course, is a huge player. They have the challenge of deciding whether to defend their currency, strengthen the yuan, with implications to significantly affect their exports, or work on reform, which seems to be what they are planning to do in terms of moving their economy from an export-driven economy to a consumption and services-led economy, with huge impacts in terms of becoming a value-added exporter, innovation player, reforming their state-owned enterprises, and so on. And then you have the category 2, where you would expect to see a hard fall. Countries like Malaysia, Brazil, which are huge on mineral exports. And then you have the category 3, which are expected to benefit from what is happening. And India is one country which has been identified as a bright spot, particularly because of the reform agenda. So how does all this affect Sri Lanka? in a nutshell, we have two problems. We are living beyond our means, both from the fiscal front and also from the external front. So our tax revenue does not cover our government expenditure, and the exports income and the foreign direct inflows don't exceed the capital outflows and the imports cost. So we are presently borrowing to pay interest, which is not sustainable. The global outlook is gloomy. The crisis in the Middle East, the geopolitical tensions between the West and the Middle East and China, declining commodity prices are threats that need to be converted to opportunities if we are to succeed. So if we are to become a breakout nation, as has been discussed in many forums, locally and more recently in the Prime Minister's policy statement, something has to be done, and fast. So I would like to start off by asking one question from each of the panelists, followed by fielding questions from the audience. I think there's already quite a few questions that are coming from the Twitter feed. So my plea to the panelists is to keep your answers brief and to the point, and to link your responses as far as possible to the Sri Lankan perspective. So my first question is to Ralph, and I think Gunjan and Paulius can also jump in. You spoke about the Trans-Pacific Partnership. I was also expecting Gunjan to allude to the much-aligned FTP agreement with India. I returned recently from an Asian banker conference in Taiwan, where there was a much hyped discussion on the ASEAN trade bloc being expanded to cover many more countries in Asia, leveraging on the Asian Infrastructure Bank, better access to natural resources and exports to benefit from freer trade, and a single currency based on the yuan, which I believe is a very compelling case for China. Now, I know you mentioned that South Asia is relatively insulated from the rest of Asia, but how do you see trade agreements in general impacting Sri Lanka? And the second question is participating in trade agreements a way to go to benefit from intra-Asian trade?
Thank you very much, Dishan. Sri Lanka has a couple of trade agreements under negotiation with China and India. It's important for Sri Lanka to have a lot of market access, both through preferential trade agreements, including with the European Union and the US. At the same time, these are, in a way, unilateral agreements that can be withheld in the case of political disagreement, as happened. And they may not cover all the trade, the important trade for Sri Lanka. So it's important to continue to seek free trade agreement elsewhere. At the same time, there also have to be not just free trade agreements, but be part of a next generation type of agreement that also covers services and investment. That will be important for Sri Lanka to become more part of the global value chains than it is today, which is, you could see from the trade flows, there's hardly anything going into Asia. So it's very important to work on such agreements, including the TPP.
Thank you. Gunjan, do you want to just speak a little bit about the much talked about agreement with India? How do you see that in the new environment that we are in now?
Sure. I would probably talk about, if I could just take a step back and talk about why trade agreements are not just about increasing exports, but I think trade agreements should be seen in the light of that they allow developing countries, and especially countries like Sri Lanka, to help a standardized product to catch up with the quality of production which globally developed world has, to improve competitiveness, to bring down structural costs which have been inhibiting the shift up, the potential shift in the potential output and the potential growth. So I think these are the opportunity, and especially like TPP, which is why everybody anticipates Vietnam to benefit so significantly from it, is because not just because it will result in a massive increase in exports, which immediately in the short term it may not. is because it will bring up Vietnam and other countries which are part of it to the global standards of competitiveness. Having said that, the linkage to Sri Lanka and India, I think there are, there are multiple agreements within the region which are been happening, but the idea is how do you want to catch on to it and, and create areas of opportunity which will lead to sustainable increase in, growth. For example, in Sri Lanka, as I understand, as one of the esteemed panelists mentioned in the discussion, is the huge diversity which we see with respect to the contribution of agricultural activity. And being so close to a country like India, Sri Lanka can actually develop and create a huge agribusiness industry. I mean, one, the availability of land is there in Sri Lanka, so the production per se can be created, and then you have avenues to support countries like India. I mean, Vietnam is benefiting significantly by the hub and spoke model of being close to a country like Thailand, and so Sri Lanka can also link up to either India or any other country or even other countries in the region. So I think trade agreements per se should probably be seen as an idea of improving competitiveness and creating more diversified and more sustainable opportunity of growth.
See, the discussion right now seems to be that also because of the slowing down of growth in the West, that we need to rely far more on intra-Asian trade. So what more do we need to do in terms of driving exports to other Asian countries? Is there potential to export our apparel, tea, rubber outside India to the ASEAN countries? Can I ask that question from Paul? Yes.
Hello? Yeah. Can I make one just point about trade agreements? They're inevitably politicized. And I think it's a failure of politicians sometimes to sell it to the populations. Because when a trade agreement is really, first of all, I think it's binary for a country, especially like Sri Lanka. There's no choice between, adopting a free liberal trade model and then not being part of trade agreement. I think if you stay out, by definition, in the long term, the cost is going to be very high. And I agree with everyone here that it's not just about the short-term metrics, how much you will sell of this and that. It is about standards. It is about unleashing productivity and pushing your own economy to reform. And it's the best way for politicians to sell difficult reforms. You can always blame the foreigners, the external party. And on the other hand, it is always negotiated. Malaysia has made a big fuss about joining TPPA, but then it negotiated pretty much everything that it wanted, all the transition periods. So it is a voluntary, so that's my first point. And the question was about ASEAN, whether it improves. I think by definition, whenever you enter, especially something as broad and as ambitious as TPPA, you're going to improve your relative position. And you will have better access to the other member markets. I think ASEAN, by and large, already on the way. And I think Sri Lanka definitely has a lot of complementarity with ASEAN in terms of exports. Yeah.
Okay. Thank you. My next question is on the foreign policy. I think in the previous, I'm going to ask that question from Nishan. In the previous regime, our foreign policy was biased towards China to a large extent and to the east. And now in the new regime, there's a lot of opportunities that are going to come in terms of opening up with the West once again. Do you feel that this is a positive trend, given the strengthening of the US economy and also discussions on fragility of the Chinese economy today?
Thank you. Let me comment on that and the discussion on trade as well. I think if we try to understand what happened in the previous 5 years, the look east policy that we talk about, it was mostly driven by the fact that financing and investment from the West was looking leaner than it had in the past. And China offered a quick way to actually attract financing and investment, especially for public sector investment. Now, that was not necessarily all good for Sri Lanka. There's lots of analysis by transport sector economists that show that this also created a large number of unsolicited proposals that were funded, because because moving from multilateral to bilateral funding involves or creates the space for not following certain rules of accounting or auditing or standards in how projects are implemented. Bilateral funding regulates the use of project funds much more carefully. So what the economists also tracked was that the fact that there was a large number of unsolicited proposals and that the cost escalation on these were very high. So Sri Lanka paid significantly too much for its roads and other transport infrastructure. And this is true even when it got funding from India for railways. It turns out that the costs were too high, according to the calculations by Sri Lankan transport economists. So in that context, I think we have to understand that it was convenient and fast, but the political value of it was greater. Perhaps on the economic side, it came with significant costs that have also to be thought about. On the other hand, more than 50% of Sri Lanka's exports go to the West. So there is not going to be this magical and sudden switch from depending on Western markets. It's going to be slow. We say that there are two concentrations or two factors in which is the puzzle in trade. One is that more than 50% of our exports end up in Europe and the United States. The other is that less than about a very few number of products, tea, textiles, and a couple of others account for more than 50% of our exports. So Sri Lanka not only has too few markets, but also has too few products. We can talk about getting into China, getting into India, but we must also talk about what Sri Lanka then has that is attractive as exports to those markets. And I think you can't have one conversation without the other. And when talking about exporting to China and India, which are relatively new markets, you have to ask questions about the infrastructure that we have in place to get into those markets. When Canada wanted its businesses to get into the Indian market, they put 300 people in the Canadian embassy in India, not just Canadians, but Indians, to facilitate and help businesses with information, intelligence, understanding on how to function in the Indian market. Sri Lanka does not make that kind of investment, which is a public good for all businesses, yet. And it's also about how free trade agreements are negotiated. When Sri Lanka, I think you talked about agriculture. Now, we worked with the Lanka Fruit and Vegetable Producing, Processing and Exporters Association and the National Chamber of Commerce to ask why the Indian Free Trade Agreement didn't help agriculture and food producers in Sri Lanka to actually capitalize on the massive opportunity in the Indian market. We found that actually Sri Lanka did not have a mutual recognition agreement with India on testing and standards. And therefore, massive non-tariff barriers got created in Indian ports that made exports unviable. Even though we had a zero-rated duty, which in theory implied huge opportunity. So there is a significant weakness on the Sri Lankan side in the capacity to negotiate.
I think just to add to what you mentioned, I think there are two aspects. One is politically to be able to communicate to the masses the value of certain things, particularly when it comes to free trade agreements, certain aspects is something that we struggle with.
That's right.
And the second point is in terms of the exports. Getting back to the earlier question, wouldn't it be easier for us to really grow our exports to the traditional markets that we already have, given the fact that they only take a very small percentage of our exports? I mean, if you take the US, Sri Lanka's share of apparel imports to them would be a mere 1%.
Yeah.
So to grow that 1% to 2% for us would be a huge thing. Similarly, when you look at the tourism sector, long-haul tourist destinations in Europe, the share of business that comes to Sri Lanka is probably again a couple of percentage points. Doubling that is much easier than to try very hard to look at new export destinations like China, Malaysia, and so on. So that's the other aspect.
I would say China and India also are very large countries.
Sure.
And very large markets. And diversifying your export markets has the value of being able to cushion you.
Absolutely.
During economic cycles that affect some parts of the world and not others. Sure. So, but that diversification isn't going to come without a lot better, a better effort at the terms of negotiation. In the public sector, also infrastructure that is built around the ability to trade, export financing instruments. So I said small and medium sector in Sri Lanka account for less than 5% of exports, mainly because we lack the kind of export finance instruments that especially the small and medium sector needs. So these are the problems, the nuts and bolts problems that have to be solved by a professional bureaucracy and a professional approach to actually solving problems. I think this kind of superstar approach of announcing some big policy change in Parliament without having the ability to give it legs and make it work. The free trade agreement with India is an example. And because of that, the problem you said emerges. People lose trust and faith. Because if the government is able to demonstrate that there's benefit from free trade agreements, then social consciousness and understanding that it creates employment, all that, will also adjust. But failure of government in that sense also then has a knock-on effect that even good ideas may be resisted, I think, which is your point.
Sure. I have just one more question from the panel before we take the questions from the audience. I think we have time. I think I was given time till 1:10. So we'll leave an hour for the questions from the audience. Nishan, if I may ask you, the ease of doing business ranking is considered as a critical scorecard to attract foreign direct investment to debt, equity, FDI markets. Now, we now have the twin advantages of peace and quality infrastructure. At the Taiwan conference that I attended a couple of weeks back, as I mentioned, the Prime Minister of Taiwan mentioned that Taiwan has moved from 61 to 19 in the last 5 years, and in the last 2 years come down from 19 to 11 in the doing business index. So what do we need to do in Sri Lanka to achieve that kind of feat?
So at the risk of being the one that's talking too much, I think we've published in the past several documents on how Sri Lanka can significantly improve on the ease of doing business index.
Yes.
Okay. But I think it's important to focus on the areas where we are weakest. For instance, enforcing contracts, Sri Lanka comes out extremely poorly. It's one of the lowest ranked countries in the world. Okay. It's also comes out poorly in the complexity of paying and administering taxes. Okay. In registering property. So there are some things, when businesses look at Sri Lanka, they will look at the rankings, but they will also look at which is the problem that's going to bite us the hardest. And the fact that when you go to Sri Lankan courts, resolving a problem is so time-consuming, especially when it's related to land, but also commercial contracts, is a significant downer to taking the risk of investing in Sri Lanka. It's said as a joke, but it's true, that in Jaffna, in the past, when a lawyer gave his daughter in marriage to another lawyer, the dowry was 5 land cases. Okay, that was good enough to see him through for the rest of his life. Now, I'm not sure much has changed, right? And yet, these are not things that take money to solve. These are things that are simple, systemic rules, common sense, that you put in place, because all the countries around us, especially in East Asia, are solving these problems and building confidence. So even with the ease of doing business, I don't want to go into the details, but we've published them. There are very simple things that can be done that can significantly change Sri Lanka's ranking and take away some of the things that bite the hardest. And I would say that's the approach to take.
Shiran, do you want to add your comments on a couple of things on the aspect of the ease of doing business, where there in low-hanging fruit in terms of what we could focus on immediately. And second, there's been a lot of prominence given in the budget to digitization of our payments, whether that would also help in this whole initiative.
Just to add a bit on the doing business rankings, I think from a foreign investment perspective, this is something post-war we've not seen as much as we should in terms of FDI coming in. One clear issue a lot of foreigners, when they do meet with us, expresses policy consistency. Because you have either a government for 5 years or 10 years, and then policies change. So whatever, for example, in the budget that was brought in terms of the lease taxes on foreigners were brought in, was simply a measure to reverse what was previously adversely impacting foreign investment. So it's not a step forward, but rather a correction. So what needs to be done in terms of future planning, I think, especially what Nishan was talking about, long-term planning without short-term fixes, in particular with investment, needs to happen in terms of policy consistency and people echoing the same story. And that requires a lot of these investment boards, the BOI, or whatever the new operational functionalities of which will come about from it, to echo these sentiments. On the digitization of the economy, I think, again, largely it will depend on the administrative capacity of implementation. I think a lot of the proposals in the budget, on the word of it, sounds very good. But the administration of it, I think, is sort of the issue of it. And digitization can have a whole range of advantages in terms of bringing more people into the system, into the tax net, improving the system, reducing the bureaucracy, reducing the paperwork, making the public sector a bit more efficient. So those things are sort of the long-term fixes which the economy sort of needs.
But they do bring in a lot of benefits. I mean, particularly if you take the example of, let's say, the pensioners and the Janasavya recipients. You know, the funds can go in directly to the end person without any intermediaries. So that's great. I mean, that gives a lot of confidence to the foreign investors, aid associations, and so on, if it can be done. But the question is whether it can be done in the time scales that have been given.
I think with most of the time scales that have been given, I think it's rather optimistic in terms of implementation dates. But if you see the steps going in the right direction, then I think the chances of it actually being implemented and it having effect does sort of come in. But in the near term, I think these leakages, should be stopped.
So thank you, Shiran. Shall we then move on to the questions from the audience? I think there is a Twitter feed. Nishan, shall we start with, no, I can select the question, I guess. Many speakers spoke about enforcing structural reforms that can move forward Sri Lanka from the middle income trap. What are the reforms that we can practically implement from a Sri Lankan context? Any one of the panelists would like to respond to that question? Please go ahead.
It's a very valid question because we spoke about free trade agreements, which takes at least 2 parties. But also there are plenty of reforms that Sri Lanka could implement all by itself. And the Prime Minister's speech and the budget speech, I'm not necessarily speaking about the numbers and the budget speech, but the policy direction as expressed by both the Prime Minister and the Finance Minister go into that direction. Structural reforms to attract but also retain and improve the linkages between foreign direct investment and domestic suppliers is an important type of reform that can be put in place. Some of the measures mentioned from both the Prime Minister and the Finance Minister about accelerating approvals of FDI, making it easier to move foreign exchange out of the country, relaxing the restriction on land sales to foreign companies, reducing the upfront payment for land leases. They actually wanted to remove the whole tax. That's quite generous, I would say, but at least remove the upfront payment. In terms of doing business, access to finance, restrictions make it easier to access finance by small and medium enterprises could be considered, including the proposal to have a registry of movable assets, which makes it easier for companies to pledge assets and obtain loans without having real estate. Taxation is important structural reform. It's a short, medium, and long-term problem in the country. And structural reforms in taxation, meaning making the tax system more equitable, simpler, and easier to administer, is extremely important. Some taxes have been removed in the budget, which is one step, but all the other simplifications are actually reducing the tax collection, which is a step in the wrong direction. And finally, the private sector, or the public sector, is a very attractive employer. It's an employer of first choice for many graduates. So what is it that makes the public sector so attractive relative to the private sector? Is it the working hours? Is it the defined benefit pension? What can be done to give the private sector such certainty that the brightest graduates choose to move into the private sector rather than the public sector?
I think a related question there is in terms of the state-owned enterprises. I mean, the public sector is bloated. And nobody likes to use the word privatization, but it's very important that we look at significant productivity improvements in that area and ensuring that the public sector is also profitable and the right decisions are made to ensure that it happens so, because otherwise it continues to become a drain on the economy. Any thoughts on that area from the panel? Go ahead.
The middle income trap.
Yes.
It's a bit surprising that Sri Lanka is already talking about middle income trap. I think it's going to be a while before you reach that stage. I think it's much more important in Sri Lanka how you make the growth sustainable and smooth so it doesn't go up and down all the time. You avoid the classical emerging market crisis. But on the middle income trap, it is a very important question. And the two countries that we've seen experiencing this, Malaysia and Thailand, it's simply what happens is your old revenue model stops working. And your industries basically are old and tired, and you're struggling to get beyond. And I think it just boils down to very simple. You already mentioned one pillar, is you need to have a proper tax base. You need to collect taxes from the people, from the corporates, and then you need to invest them. And I would just put one area, it's education. It's simple as that. If you want to avoid the middle income trap, in 10, 15 years down the time, you have to be equipped, you have to have the population that can adopt change, that have the critical thinking, that have the skills, the higher value-added skills, in order to move beyond the traditional revenue model that you are pursuing at the moment. Yeah? That's my comment.
Thank you.
If I was to add a bit on the question from the participant, I think the key aspect is, I think they've identified the key reforms, but the last sentence of the thing is how practically implementable is it in a Sri Lankan context. I think that's where the issue will be, because given how they've tried to bring about small reforms in terms of the budget and what they've brought through. And that has also faced several headwinds and them going back on what they've been saying. So I think the analysis of where the reforms need to be done is quite clear, but whether it will be practically implemented, whether you get 50% of what is promised in terms of reform, that will be where the end result will be in 3 or 4 years' time.
Absolutely. But getting back to that question, sorry, go ahead.
And it kind of marries the two thoughts which have been floating around with respect to implementable reforms plus the private sector. And that is where I think Sri Lanka can take a step up with respect to, I mean, we talked about how there is a need to diversify exports and identify new opportunities of diversification, new markets. And then we've also seen limited private sector participation and very limited FDI inflows into the country. Maybe that is one sector we need to see and open up it for private sector, wherein you create value-added services, you create industries which, I mean, it's right now traditionally spices and tea. So why not create one more sector of, I mean, I go back to agriculture again because to me that's like a low-hanging fruit. So you invite private sector participation in either, I mean, it could be as simple as storage or processed foods.
So you take the supply chain and then look at individual components and then see what can be privatized within a whole state-owned enterprise environment. So that's one way of looking at it. Any thoughts specifically from the Indian experience in terms of how they are looking at reforming the state-owned sector, whether it's the banks, whether it's the public sector companies?
Well, that's a difficult one. In India, public sector, and I think everywhere in the region, probably public sector and state-owned enterprises reforms continues to be one of the bigger challenges because of the inherent nature of these countries and these organizations. But we are seeing in India, at least, there is now a concerted effort and focus to, again, not using the word privatization, but divesting some of the stake ownership, and that's going. I mean, that's definitely helping meet the fiscal targets and utilizing those funds and channeling those funds into more productive capital investment.
How do they do that? When you say divesting without privatizing, you're saying selling up pieces of the operations?
Yeah, that's exactly what India has been doing. And this budget and the last budget, there has been a concerted effort to sell a certain stake in these public sector enterprises. These could be monopolies in utility sectors or electricities. And you basically sell it out in the market and then use those funds to either into building roads, creating highways, creating joint ventures in SPVs like the way India is doing right now. It has created joint ventures, for example, in the railway sector with respect to railway, the state governments, and the coal mine. So what it does is basically the states give the land which the railways will make a railway line from these mines to the industries. So it's a joint effort between the private sector, the government, and the state governments, which there would be a revenue sharing also.
And the employees are also given a stake in it.
It creates states also motive and incentive to participate. There is revenue sharing, there is employment generation, and obviously the private sector benefits because the earlier bottleneck of availability of resources also gets tackled in that sense. So there is probably a need to create these more JVs and more SPVs. Maybe privatization is probably a distant objective, but small.
Don't use the word. The trick is not to use the word, but find ways in which you can go along that path.
Yeah.
Nishant, you want to add something?
Well, I wanted to respond to a question that was maybe connected, but it was addressed to me saying that in many forums people talk about government doing better, but is there a practical way to make government do better? Should I address that question?
Yes, please. Yeah.
So I think that there is a practical way, but it's something that is to do with a larger change than people imagine. The real problem is incentives. Politicians have incentives to behave in particular ways, and predictably, they behave in the ways that they are incentivized by our political system. But by political system, I also mean businesses, not just individuals. Not just in electorates, people want you to get them jobs, people want you to get their children in school. At the business level of business associations, they want you to increase a tax to protect your industry, change a regulation to give you an advantage over somebody else. So as long as the incentives that drive politicians of this sort, and everybody is seeking simply their self-interest and their individual benefit, we set ourselves up into a huge prisoner's dilemma. We all do what we think is good for us, and we all suffer collectively. Now, when Amartya Sen published his grand thesis on why famines never happen in democracy, you would ask why. Is it because democracy was better governed? No. He said it is because in a democracy, there's information that flows to everybody, and people become aware of the famine. And it is not because the people who are starving vote people out of government. People who starve die. They can't vote for anyone. It's because the other people get so outraged by what they hear of starvation that the government loses. So government is an incentive to prevent famine because the people who don't suffer will punish them. Now, I think until we get into a culture where business associations are lobbying government for the public interest, not just individual interest, you're not going to get that. Because government, as long as you're lobbying for private interests or association interests only, government is going to look at that and say, what is my political interest? If I have no benefit, and if I can't get, if there's no public interest involved, then I don't have incentive to move forward. But perverse changes can take place. A single industry in this country, when European GSP Plus was lost, convinced the government to increase taxes on bicycles. Bicycles is the quintessential poor man's transport. In a village, it makes a difference between getting your kid to school or not. We can get cheap bicycles from Japan because they make good quality cheap bicycles, but Sri Lankans make bicycles for the European market. But to enable those a single industry to sell in Sri Lanka, raising taxes on bicycles doesn't make any sense. It's not in the public interest. And yet it's in individual entities' interest. But as long as we have a business culture that doesn't invest in the kind of research and in advocacy that is based on recognizing that what's in the business interest also is in the public interest, making a case in public in a way that then incentivizes politicians to respond, I don't think you can get that. That's the practical way to do that change.
The situation right now is pretty critical. I mean, that deflection point has to happen fairly soon. Otherwise, you could be having to wait for a shock to happen for the economy to respond, which is something we have to avoid at any cost. I mean, we've seen what's happened in Greece. We've seen what's happened in Argentina. So we need to make these changes, and what it's going to take to make these changes is probably a period of political stability, where there are no elections on the horizon for a while. And then people can really buckle down and really work on some of these unpopular but necessary measures to move the economy forward. Don't you think?
My own experience is that Sri Lanka is very good at, pulling back from the brink of a crisis. But only pulling back just a little bit so that you are back in the crisis 3-4 years later, and then pulling back just as you're in the brink of a crisis. There's a novel by a favorite science fiction author of mine called The Restaurant at the End of the Universe, where through the ability to manage time, you can keep this restaurant moving back and forth right at the time that the sun is going supernova. You're always on the brink of the crisis, but never quite there in the crisis. So I think that's really the problem. If you look at the last 20 years, we've always come to the brink of a crisis and done what it's taken to get out of it. There's a term in Sinhala that says "gata gahagana yanawa." That is, it's a term referring to, if your sarong isn't tied up properly, it keeps coming loose, but you keep just putting a temporary knot and keep going. I think that approach to policy making and economic management is the problem. So I'm not sure that we are so bloody-minded that we are going to end up in a terrible crisis that we can't, that then creates such a shock. Like in 1977, that everybody's going to wake up and say we to change direction completely. But that's also a disadvantage, because we are also going to avoid the real painful long-term changes needed.
Just making a comment to what you said earlier with respect to with respect to your thought of whether it's the change in political dynamics or the political cycle which inhibits reforms. Unfortunately, that's been the case largely. I mean, if you see any of the countries, it's very short. Most emerging economies, most developing economies, it's very short-sighted, and its policy reform is kind of matched with the tenure of the government in power. But just to bring in the example of countries which like Vietnam and Myanmar. Myanmar has already seen a transition in leadership. Vietnam is going to next year. But these are the countries where you still see a lot of investor interest. There is a lot of FDI flowing in. There is a lot of activity going on. Whereas a lot of similar with respect to Sri Lanka in the sense that the sectors of opportunity are very limited right now. Sri Lanka stands, in fact, better in the sense of maturity of institution with respect to, if I compare it to Myanmar for that matter. So I think probably the way forward or the practical way is for governments and policy makers is to come out with transparent and consistent message is exactly what investors and even private sector within the country is looking for. If you maintain that and like in India, probably if we discount the last 10 years, the politics and the domestic economics used to coexist irrespective of whatever was happening up there. So if you're able to create that momentum in the private sector by way of consistent and transparent policy announcement and transparent regulatory authorities, it attracts long-term investments, which is I think is the way forward.
Sure. I think it's also fair to say that in the past, most countries who moved from the developing to the emerging and to the developed status have achieved that through the support of Western investment, both in terms of investments into debt, equity and FDIs, as well as investing in the capacity building efforts. So I think aligning yourself to the West probably is a better thing from a structural point of view in today's environment than what would have been thought maybe 5 years back. What do you think of that comment? Shiran?
Yeah, I think in terms of the realignment of what's going on in terms of the developed markets, there is a scope to tap those, and since Sri Lanka is on that positive vibe of these democracies, that I think that 2015 has been a great year in terms of elections, and sentiment has sort of changed. There is a potential to tap them as well, but I think if for a neutral foreign policy which also targets Chinese investment, especially them being able to roll out these investments in a very short time, those are needed because the more long-term aid from Western powers or even Japan or any of these countries would take time. They would want a systemic process for it to come through. But I think it's a delicate balance, and it really depends on policymakers. Yeah. In terms of crisis, I think what Nishan was alluding to, if I could take the question on monetary policy and reform.
Read out the question for the audience.
So the question, I think it's moved up. It has to go down a bit. So the first one, I think, is on how is Sri Lanka going to source revenue in case investment, non-tax revenue is lower than expected? Will Sri Lanka end up in a revenue crunch once again? So in terms of the fiscal, in terms of the budget, I think what a lot of people don't realize is that the tax base is growing from, it's going from a higher base of super gains taxes, which no longer come in 2016. So what they've proposed is what you would want to term as super gains, non-tax revenue, which is the 100 billion that they're looking to get from the idling funds from state-owned enterprises and other funds. I think that's what the Deputy Treasury Secretary has outlined. So again, another one-off short-term fix to sort of solve your revenue. So I think the administration of this will depend on whether we'll get 100 billion or 50, 70 billion. But overall, tax revenue growing by 38% is very optimistic. Falling short applies pressure on the deficit. But as I think what they'll end up doing is sort of curtail public investment from about 7 to about 5.5, 6. So there is scope from that point of view.
There's also a lot of expectation on reducing the taxes, particularly on the income tax side, and that encouraging people to voluntarily register and pay, which without a proper enforcing mechanism, the digitization taking place, it's going to be very, very difficult. I mean, a person who's not used to paying, or a company that's not used to paying 5%, who's used to paying zero tax is not going to pay even a 5% tax unless he's expected to do so. I mean, that is going to be very difficult from an implementation standpoint unless you've got your checks and balances in place to drive it, isn't it?
Yeah, I think 2016 would sort of see the incremental impact from it, but you won't see the wholesale of getting more of the tax base. In terms of the monetary policy adjustment question, which is directed at Nishan, probably I can give my thoughts as well. I think the fiscal, the budget has sort of passed on the baton towards the central bank to sort of figure out what direction the economy should go, in particular because the budget and the Prime Minister's policy statement is more of a medium to long-term agenda. So in the short term, there is a lot of issues in terms of debt outflow that we're having, pre-US rate hike that we're having, the level of imports that is going on in the economy, inflation on the rise. So I think the adjustment should come in the first half of next year, maybe December or even in the first half. It could be in response to flight of capital post a Fed hike, or it could be because of inflation rising. I think now core is on the way up. Our estimates think it could go between about 5 to 8% next year, headline inflation, because you're going to see the pass-through impacts of depreciation and other things as well.
Take the next question,
So
recent missions.
this will sort of preempt it, but the issue for the central bank is, will they come late into the game in terms of tightening? After a bit more of the rupee taking a brunt of the impact, will they let the rupee, I mean, at the rate they're going, it can easily go above 150 if it does about a rupee a month. Will they go on that policy? Will they take a policy, okay, let's let the rupee take the brunt of the adjustment, or will they let the interest rates take the adjustment? So I think it's a policy choice. What the governor and what they are echoing so far seems to be that we're happy to let the rupee go and rates need not be eased. But as has been the case this year, the governor as well as other policymakers have been changing their tunes every 2 or 3 months. So that's a bit of a concern as well. So probably when things do get worse, they'll look to tighten sooner rather than later. But I think tightening, for example, in the first quarter of next year would be prudent. But it's also at the risk of, for example, I think what the central bank is sort of learning from last time is private sector credit growth was flourishing when they did tighten. And it was subdued for about 2 years. You didn't see bank growth and private sector growth happening for about 2 years. And it only started in August 2014 properly. So for a year, you've had really good pace of private sector credit growth, which again, if you tighten, will again get squeezed because a lot of this has come through consumer durables and other things. So it's a policy mismatch. Which one do you want to take a hit on? But I think sooner rather than later, they will do.
So your view would be that the government would let go of the exchange rate rather than allow the interest rates to go up significantly.
Right now, I think they're pretty happy to let the LKR take the brunt of it. But I think the policy would change next year where the interest rates would be aligned to sort of increase to sort of meet the pressures without the LKR just going.
So we have many economists on the panel. I'm sure the audience would like to know your perspective in the medium term and also in the short term on the macroeconomic indicators in Sri Lanka. I mean, in terms of the interest rates, exchange rates, and the inflation. Can I get some perspectives from the IMF and the World Bank first, and then maybe Nishan from the local perspective?
I can only speak for the World Bank. Well, we expect that there could be more depreciation coming. We don't think it's going to be such a hit on inflation to go up to 5 to 8%. Really hope not. But at the same time, we do see resurgence of core inflation coming. You have to carefully track that. In terms of growth, we think growth is going to increase from this year. We saw the second half, or the second quarter, the third quarter is not out yet, but second quarter growth was already quite positive compared to the first quarter. So we think growth will, 2016 will accelerate, but at a much lower level. The numbers, after the rebasing of GDP, we had to also re-estimate the source of growth, the lower impact of construction, the larger impact of personal services, to look again at what drives growth. At the same time, I mean, it's unsustainable to keep relying on a growth model that relies purely on non-tradable services, financial services, personal services, construction, trade. So what is needed is still a more outward orientation of the economy. The budget, as expressed by the numbers, does not really help. A lot of import-related taxes are imposed. So the economy's orientation may actually change more inward. So we have to see how this works out.
If I were to be a little bit more precise, and if I were to ask you your 6-month outlook on interest rates and the exchange rates, and your 1-year outlook for Sri Lanka, what would it be?
No, I don't dare to give a 6-month outlook. Sharon is very eloquent about it. I'd rather not.
Okay. Anyone would like to make a comment on that? Nishan?
I see the World Bank is the same view.
So, last year when I spoke here, I said
you can always, give your sense of probability as well.
Of course.
You could say with this level of confidence, these are the numbers that I'm talking about.
I'm going to say something completely different.
Okay, go ahead.
I said last year that trying to predict the movement of interest rates and exchange rate is like a blind man in a dark room looking for a black cat. It's simply because of this. If you take your economics seriously, if it was possible to predict, then it shouldn't be possible because the market should have already priced it in. If I am right that interest rates should go up, then market should have already priced in that expectation, and there's no arbitrage. There can be no benefit by that movement. So if I'm telling you that I can predict, I'm either telling you that the markets are not working well, or that I have some inside information that nobody else knows, right? Neither of which is true. But of course, what I did in my presentation is point to the pressures. So I don't want to run through that again. You can see, and I think Sharan's encapsulated them well, that there are various pressures showing that that exchange rate has to give, interest rate has to give. If one doesn't give, if you depend only on one, that will give a lot more. If you can balance it by having both of them give. Then you have to ask for the political incentives. But really the smart way to manage it is to allow the exchange rate to depreciate at a rate that is lower than the interest rate differential between the dollar and the rupee. And exchange rate must depreciate at that rate because Sri Lanka's inflation is higher, so it's absurd to think that exchange rate should stay constant. Then that's political manipulation. But as long as it's depreciating at a slower rate, so less than 0.5% a month, then there's no advantage in keeping your money in dollars, right? So really, that's the balance that a professional exchange rate management must make, that you iron out the volatility and you allow the depreciation to respond to fundamentals in a gradual way that doesn't create incentives to speculate.
But the finance minister has in many forums mentioned that he would not like the exchange rate to depreciate beyond a certain level, and he would like to keep interest rates low. So obviously, from the government's perspective, they would try very hard to keep interest rates at these levels and probably the exchange rate also not to depreciate too much. What events can precipitate a direction in the opposite direction, where we can actually see a strengthening of the rupee or a reduction of interest rates, or keep it at these levels? What needs to happen for that to happen? Is it external finances?
Largely external, I think. A lot of fund flows back to emerging markets, frontier markets like Sri Lanka. We're able to, for example, whenever we are in a deficit in terms of borrowing, we're able to fund it from sovereigns or other means or measures. So basically, external picture getting better would sort of ease out the concerns. I think one thing I'd like to add to Nishan's theory, as a business which has to provide forecast 6 months, even 3 months on interest rates and FX, what we try to do is give a sense, as Dilshan mentioned, on a probabilistic approach. So in our perspective, everything is weighted towards what the economic data and things are pointing towards. In terms of the market not pricing in a rate rise, I think what you've seen in terms of bond movements in Sri Lanka is a significant amount of volatility, which you have not seen, for example, in the last 5 years. You're seeing bond markets reacting. So, for example, at the start of the year, when we rolled over that sovereign by using reserves, we saw a rise in bond yields. Then we saw a surprise rate cut by the central bank in April. Bond yields came off. Central bank was able to borrow domestically a lot. And that period was then, you sort of saw a steep climb again. Then August, I think global tensions got, global worries got a bit overplayed, and bond yields rose up. And then in September, October, once you had the 350 million SLDB done, sovereign done, talks of that sort of eased a lot of the traders thinking that, you know, we will be okay. So I think it's more of a play in terms of currently in the market, in terms of what's happening in terms of our borrowing.
Sure, sure.
But the underlying fundamentals does not support, for example, it being at these levels. So I think volatility will be there. In 2016, we feel that, you know, the volatility.
So the fact that the government able to raise funds from the international capital markets once again, round about March or April, you don't see is going to make a significant impact in a sustainable manner to improve the macroeconomic indicators?
If they do, I think interest rates probably could, you could have a marginal increase, not like a shock scenario of maybe about 2% or 3% from current levels. So it largely depends on the financing concerns, because the 2015 debt outflow issue continues in 2016, not to the same extent, but there is that issue rolls on. So I think that's something that you can't forget, and it's also probably a post-Fed rate rising environment where the possibilities and the scenarios are endless. So I think in that scenario, it might happen.
Moving on to a different area, but still related to the macroeconomy. The geopolitical tensions that you see, particularly in the Middle Eastern countries, and the tensions that are happening right now in the Middle East, how likely would that lead to a position where our inward remittances are at risk? And that has been a stabilizing force in our balance of payments for many years. And we've almost taken it for granted for many years. So how likely would that become an eventuality? And if it does happen, what can the government do to address that issue?
Just to, I think, give a
I'd like to hear both, your perspective as well as maybe the IMF or the World Bank perspective.
In terms of a reality check, in terms of the oil prices falling down, we've seen a bit of an impact in remittances growth this year. I think it's only been 1.8% compared for the first 10 months compared to last year. So we are sort of seeing that magical 10%, 15% growth sort of coming down. So we have to get used to the fact that we're not going to see double-digit growth from these inflows. Oil prices, I think it could work either way, but at the current levels, I think we won't see as much remittances inflow growth that we need.
Sure.
I'd like to just make a point that Sri Lanka is not the only country in the region which is dependent on the remittance flow. Bangladesh, and you have Philippines in the east, which is also highly dependent on remittance inflows. And these are the economies which are also witnessing this moderation. And right now, it's not affecting the growth per se, but you've already seen a moderation because of continued subdued oil prices in the Middle East. But back to the question on Sri Lanka, I think whichever way or whichever risk lens we wear and try to analyze the situation, the idea is to, over this medium term or over the next few years, to create avenues and create sectors where you can, diversify your foreign earnings. If it's right now, it's remittances. It can be tourism, and I know Sri Lanka attracts a fair amount of tourist-related inflows. You can create that. Build more infrastructure around, middle-income tourism. You have a high-end tourism, so to kind of diversify that to not just remittances for driven foreign exchange inflow, but other sectors also. I think the whole story is to not just ride the cycles. Every time there is either a subprime lending crisis, or there is an oil-driven crisis, or a commodity-led crisis, not to ride the cycles, but to develop and create and use these, arbitrage, which like this time there is an oil price movement which is benefiting countries like Sri Lanka, to use that opportunity to create sectors, value-added sectors, to create opportunities to diversify. So I think that's something which needs to be looked at, not just...
that's a very good point, and I saw it in one of the slides, I can't remember whose, where we really didn't benefit from the lower oil prices, because although the import bill should have potentially reduced significantly, it has gone into other imports. So net result was actually a negative despite that. So that's really a concern.
Yeah. In fact, on the sectors too of opportunity in Sri Lanka, when I was here last time a few months back, I was told that Sri Lanka is, and correct me if I'm wrong, that Sri Lanka is the largest exporter of chartered accountants to the world. And that seriously surprised me.
SEMA to be specific. Yes.
And I mean, if you have such brilliant knowledge base and skill set in the, not just in the subcontinent but in the region, there is a huge upside to that. And there is a given level of skill set. I mean, countries like Vietnam, Myanmar, though are right now attracting a lot of investor attention, there is an inherent challenge of organic growth of skill in these countries, which Sri Lanka is already above that, right? You have a given level of skill set and education of the, so you just have to take that one additional step in terms of...
That comment actually flows on to a subsequent question in terms of, are we really leveraging on the potential for the BPO and the KPO sector in this country? I mean, there's been a lot of discussion in terms of making that a $20 billion industry, but whether we've really leveraged on that is a question. Does anyone like to comment on that?
Shall I take a question from the screen?
Sure.
Yeah. It says some of the required reforms are not politically palatable. How weak government can handle this issue. So I think this is coming back to the thesis on weak government creating an opportunity. Okay. So there is somewhat of a problem. I think
yes.
where when governments run policies that are popular in the short term, but damaging in the long term. So you call that populism, okay? And that's one set of problems. Another set of problems is, how do you get a government to act in a way that does put into place good long-term plans, structural changes, etc. I think the question is really about governance, okay? And a Pakistani friend of mine working in the Pakistani economy told me recently, I think we get the politicians that reflect society. It is about your instincts about how governance happens that reflect then the kind of politicians that also come about. So the idea that we need that tough guy, that king, to come and, shove down people's throats, things that are unpopular but good for him in the long term, I think is very attractive, but actually all those who wanted that never got it. In 2010, I remember lots of economists telling me, finally, we are going to see labor reforms. The private sector has been lobbying for significant reforms to the hiring and firing policy on labor. But nobody, in government outside has come up with a really, thought out plan about how you both protect labor while making labor more flexible. And making labor more flexible is also about creating means for labor to move, better mobility between private and government sector. Having two different pension systems for the two doesn't help. But the systemic approach to solving that problem has never been developed. But everybody had it in their self-interest, that we should get a strong government to ram through labor reforms. So I think, that notion of governance, always looks to, some good governance as a superhero. That we bring, we elected a, hero of good governance, he's in his seat, and he can deliver good governance to us. But I think the alternative model is to think good governance as an orphan that we must all take care of, or nurture, and help bring up. Good governance doesn't come free. It comes because all of society is active in legitimizing and popularizing something that may not be unpopular. Now today, it is, from the left to the right, people talk about cutting the budget deficit. Now technically, cutting the budget deficit is unpopular. The Mahinda Rajapaksa government undertook cuts in expenditure and cut the budget deficit. Now that's unpopular, but the legitimacy and importance of doing so had been socially cultivated or built up. So unpopular policies or things that are not, it is also a fault of social education and social understanding. If everybody wants their, quick fix, and nobody's thinking about long term, but that's not how society operates. We think about our children, we think about our futures, and being able to legitimize policies that make sense for society in the long term is a function, I think, also of business. We can't outsource that to a few civil society actors. And anyway, there is no vibrant civil society in economics, I would say. And really, we have to also invest in our universities in that respect. So building that kind of legitimacy also comes from a strong professional academic university culture of professional economists. So I know there's one bank that invested in a university chair. Right? But how much of Sri Lanka's private sector invests in developing professional capability within an underinvested tertiary education system? I think thinking long-term is so very important. And looking for those solutions in the short term is not just a problem of politicians.
And this is probably universal. I mean, we talk about Sri Lanka nurturing populist governments, but you look at the elections that are happening in the US right now, and Donald Trump's meteoric rise in the rankings in the Republicans, among the Republicans, and he's talking a lot of, a lot of nonsense really in terms of, very racial, very drastic, radical views, but he's still...
You can say that for a little while longer till he becomes president.
But he's getting there.
There was a question on India, maybe I should take that. The question was, I think, around the reforms which the government has recently undertaken, especially in context to the real estate and construction sector, and how is that going to revive the growth in that sector and the economy per se. I think a few things to probably keep in mind here. One, obviously, the motive and the timing rather of these announcements was a message that to the foreign investors and domestic investors that the government at the center is focused in its promise to deliver reforms. It did lose very key state elections, and immediately after it decided to pass these reforms, and it's kind of also suggesting that despite lack of majority in the upper house, it will keep announcing and keep undertaking reforms at the level where the parliamentary approval is not required. But just for the reform, the announcements per se, what it has done, it has eased the norms of attracting foreign investment and relaxed the minimum area size and the minimum investment which is required for foreign investors to invest in these sectors. So it's definitely going to help the sector in terms of raising revenue, raising capital from outside, because a lot of banks are right now inhibited in on lending more to these sectors given the gridlock which is existing between high NPAs at the banking sector and lack of demand in the economy. So there is a fresh avenue for these construction and real estate companies to raise capital abroad. Those with good financial books would be able to do that more efficiently and more quickly. In terms of how it will affect and revive the sector or the economy per se, I think it will be a gradual process. Because you need for the existing capacity to go before fresh investments are taken. So this will help clear off the debt from some of the books of the construction and real estate companies. But you need to see consistent increase in demand in the economy and a broad-based increase in the aggregate demand in the economy for the existing supply to go and the capacity which is sitting to clear off before you see a positive effect on the or the spillover on the economy.
Thanks, Gunjan. Can I ask the next question from Paul? Yes, I think you've been relatively quiet in the discussion so far. How much of a role do you think the venture capital will play in the coming years to develop the private sector? And how can the government support them better due to the low growth phase? I mean, in Sri Lanka, the venture capital industry has been relatively non-existent. If at all, that vacuum has been filled by commercial banks investing in investment banking, sort of quasi-capital kind of transactions. But we really don't have a vibrant venture capital industry. So I think the question is, in that context, how does the budget proposals help create that?
Okay, thank you for that question. First of all, as I mentioned earlier, the first proposition is that there is a lot of capital available, especially for Asia opportunities. There's a lot of new funds that have been set up to look for high growth markets. So from risk allocation point of view, I think Sri Lanka should be already there. I imagine there are already venture capital funds scouting opportunities, and they're looking at. But you're right. The main challenge, first of all, is that the banks have been very active. There's huge competition, a lot of liquidity, and lack of opportunities. So far, I think the problem that I see in Sri Lanka, and other panel members mentioned, is the economy remains quite narrow in its economic activity. There are only so many sectors where I think the most promising, from my perspective, would be tourism. I think that Sri Lanka can do a lot more in expanding its tourism activity. Of course, you mentioned business processing outsourcing. I think there's a huge opportunity, and the Philippines has shown it can develop very fast. And this is where I think venture capitalists have a lot of experience in supporting new startups, and IT as well, and ICT sector. And of course, I think in longer term, higher end manufacturing. So far, I see there's lack of a pipeline, if you like, for deals. But certainly, I think within 3-5 years, Sri Lanka will be very much on the radar.
What sort of enabling infrastructure or enabling environment needs to be created for venture capitalists to, to thrive, in the sense that where businesses can readily access finance? There's only a handful of companies that are really listed in the stock market. There are only just 200 companies. We don't have the equivalent of unlisted stock market at the moment. But how do you create that environment for, innovators, inventors to really be able to showcase their product and raise finance to grow their business?
Okay. Well, experience I have is mostly with Malaysia and Thailand.
Yes.
And the issue is usually over a period of time, there's not going to be lack of opportunity. There will be, the bigger problem is investability in these companies. So you're asking how to enable. It's to create, as you mentioned earlier, incentives for businesses to, first of all, follow international accounting practices, so that they become transparent businesses, so that you can actually valuate, because for venture capitalists or private equity investors, valuation is key. Also for business owners to become more comfortable with investors coming from outside. I think it's an Asian phenomenon, not just Sri Lanka, but everywhere. Business owners are very uncomfortable for taking investors from outside, especially giving up equity and showing them the books. So I think the enabling environment should be focusing on incentivizing SMEs, upper growth companies to actually follow accounting standards, declare, not penalize them for showing their profits, etc. So it's also to do a lot with tax.
It's a well-known fact that many businesses maintain 2 to 3 sets of books.
Correct.
So I think rating agencies being allowed to, rate SMEs probably would set the stage there in terms of the benefits that could come through in terms of being able to raise capital for expansion. That would be one aspect. Any other thoughts on that, Nishan?
I'll use 2 words with C. I think culture and contracts are critical for venture capital. I'll talk about culture first. venture capital doesn't work on the basis of, a fabulously compelling business model. Most people who give money to venture capital, I have lots of friends who do it, I have lots of friends who receive it. The business model and the success is all very vague and uncertain. You invest in a personality and a person. And you have confidence to do it, partially driven culturally. A kid comes out of MIT, he can walk in and get a job anywhere for $200,000 a month, or let's say 150. He says, I want to start a tech company and pay me $100,000 a month and I will make it work. You're willing to take a risk on him because you know that, he has all the opportunity in the world. And there's also a sense that the, top universities in the US, for instance, have a certain culture that generate the kind of personalities and people that you can take bets on and trust, and you evaluate that. So I think if you're talking about venture capital in Sri Lanka, you have to take that seriously. Venture capital is working in a very small way amongst a subculture that have that ability with their personality and who they are or where they've come from to engineer that sense of confidence that I can take a risk on this guy, let's see what happens. The second aspect of venture capital is contracts. That is, venture capital invariably leads to lots of very innovative, complex contracts that are tailor-made to hedge against people taking the money and running, people paying themselves, people doing all sorts of irresponsible action. And if you're in a country like the US, those contracts can be just, got off the shelf. There's a whole system of legal creativity and development, which Sri Lanka simply does not have. I can't find people to do very simple, contracts that are out of the box for me. And then if you can't enforce contracts in any case, then what's the point of going down the road? We are left with just culture, because people know contracts can't secure you. You just have to go on trust.
So it's so critical that the contracts precede the culture.
Well,
the culture will come from the contracts.
I think it's symbiotic. They work together. Contracts also help to solidify the cultural side of it. And the culture helps to knowing that no contract is perfect. If you get 90% through with the contract, the 10% can be covered by the culture. But if the contract takes you only 30% of the way, then the culture can't cover that gap, So I think these two worked in any place where, you practically see venture capital working. These two things are extremely important. And I'm not sure that we can be that optimistic, except in a small Colombo-based subculture, I think where people who've returned from abroad, people who have already started a business and succeeded and want to step out and start a new one, have the opportunity to make that persuasion. Yeah.
I think that's an area which has tremendous potential. I think we are now down to the last 5 minutes. We can probably take one more question. Can I see the Twitter feed and the questions, please? A lot of the questions that have been asked have been already addressed. Can we scroll down? With regards to the export financing, how pertinent is the creation of the proposed Exim Bank? Would somebody like to respond to that?
I can respond. Export financing is really about creating instruments that go beyond traditional banking instruments to provide for new and different mechanisms that transfer the risk of non-payment of somebody who's paying for your goods to banks rather than the small and medium producer. It's risk of non-payment and delay in payments. Both those types of risks can be sorted by different types of export financing instruments. You can have value chain financing. You can have financing based on having other contracts with the buyers or risk assessment of the country. So there are many forms of it. The Exim Bank is only one aspect of export financing. It's not the whole story. But what an Exim Bank can do is it can be a catalyst for creating and percolating these types of instruments throughout the banking system in Sri Lanka. So really, If the banking system in Sri Lanka had been so innovative and forward-thinking and started developing and running an array of these instruments, you might say, well, an Exim Bank is not necessary. But sometimes you need to catalyze these things. I mean, think about the leasing industry in Sri Lanka, which everybody is involved in. It was started by IFC. They created the first institution that did leasing in Sri Lanka. No bank was doing leasing or willing to do leasing or understood leasing. But by IFC Institute investing in a special instrument that then introduced leasing and succeeded in leasing, everybody started to emulate them and leasing became widespread. So I think an Exim Bank can be very important in being that kind of catalytic instrument that then percolates various new and important forms of export financing instruments throughout the banking system in the country.
Traditionally, just a follow-up question on the same point. Traditionally, you have the Exim banks operating in the Western countries, encouraging their exporters to export to developing countries because the government takes a risk of non-payment. Now here, when Sri Lanka sets up its Exim bank, it is not going to be that much of a comfort.
It's not just about non-payment.
Yeah.
That non-payment risk always exists, doesn't matter which country you export to, there is a risk. And the risk is lower if you take it institutionally rather than privately. It's also the fact that the liquidity that is needed to wait for that payment is just not available with small players. And when you go as a small player, when you go to a bank and say, give me a loan to cover my working capital because I have to wait 6 months to get paid, that loan comes at a very high interest rate because you have no collateral. But if they consider your contract with that guy as collateral, that's export financing. So export bank can take the export seller's contract as collateral or goods in movement as collateral rather than ask for traditional types of collateral that small guys don't have. And when you don't have those traditional types of collateral, you pay a very high premium on your loan. So Exim banks are there to say, look, we can think out of the box about collateral. We can treat your contract that way. We can
and also make business more affordable.
And in that sense, what you're saying makes an Exim bank easier because if you're exporting to countries that are secure, then the bank is in a much better position to transfer that risk, release the funding that then keeps the business going because they don't have to get paid to develop the next tranche of goods that they have to export, right? Which is quite sensible. Yeah.
I think it's time to close now. I'd like to very warmly thank the panel for actively contributing to your responses to all the questions and in particular to the audience. I think you've been an amazing audience. You've patiently sat through 5 presentations ranging from 30 to 45 minutes and then you've actively contributed to the questions and answers session. Very rarely have I seen an audience sitting through 4.5 hours almost continuously. So thank you very much. I think the panel deserves a clap too. We must applaud the audience. Thank you.
LBR LBO Debrief, Business Climate Outlook of 2016.